Welcome back. We're at Module 2, How the Stock Market Works. In this module, we're going to examine the inner workings of Wall Street and answer the often debated question, why do stock prices move up and down? So let's get right into it here. And let's take a look at like a teeter-totter. This is like a balance beam. And on the one side, you want to think of buying pressure. How many investors are buying the stock? How many shares are investors buying at a time? Let's take a look here at a common example you might see. A pharmaceutical company is awarded FDA approval. FDA is the Federal Drug Administration, and they regulate all the drugs. So let's take a look here. A pharmaceutical company is awarded FDA approval for a new drug the company has been developing. This causes the buying pressure to exceed the selling pressure, and the stock price increases. So the buying pressure directly influences the price. On the other side, there's selling pressure. How many investors are selling the stock? How many shares are investors selling at a time? Let's take a look at another example. A company misses on earnings. Now the earnings is referring to an earnings release. This means they reported less income than expected. The selling pressure exceeds the buying pressure. There's more sellers than buyers. The stock price decreases. So the selling pressure directly influences the price as well. So we always need to be thinking, what's stronger, the buying pressure or the selling pressure? And think of it like a hot air balloon. The hot air is the buying pressure lifting the hot air balloon higher. The cool air is the selling pressure. As the air cools down, the hot air balloon descends lower. So we will refer to the buying and selling pressure simply as demand. And we can actually break down price movement and the dynamics of the stock market down to three factors: the supply, the demand, and the price. We talked about buying pressure. We talked about selling pressure. We'll just call the buying and selling pressure demand. And as we discussed, the demand directly influences the price. The more buying pressure, the more price rises. The more selling pressure, the more a price declines. Now let's talk about that third factor though, the supply. Now what is the supply in this case? The supply is the shares available for sale. Now, what we want to talk about here, before we move on, just to recap, the demand is the buying pressure minus the selling pressure. So positive demand would mean there's more buying pressure than selling pressure. Negative demand means there's more selling pressure and less buying pressure. And we can see as the demand changes, the price changes.